bring in Kevin Green, senior markets correspondent, to help set up some of the broader action today. All right, KG, let's talk a little bit about the latest with regard to tariffs from President Trump. Now talking about another, this would be 25% tariffs. What's the latest here?
Yeah, so we had this announcement yesterday that President Trump plans on imposing a 25% tariff on automobile imports, as well as pharmaceuticals and semiconductors. Now, we are actually expecting more details on April 2nd, which has been a key date for a lot of these tariffs here. We don't really have a timeline as to when they are actually going to implement these new tariffs. Obviously, they're going to give a little bit of time in order for some of these companies to be able to try to bring manufacturing back, or at least plan to bring manufacturing back. But once again, this is another one of these levers that the administration is trying to pull in order to try to even the playing field. And if you actually look at it, Donald Trump and the administration really talks about the EU, saying that there's unfair treatment where the EU charges us, the United States, a 10% duty on vehicle imports. But for the United States, what we actually import here in the United States is only around 2.5%. So once again, getting a little bit aggressive. I think he does obviously want to make a deal to have reciprocal tariffs, or basically try to balance these tariffs out in order to try to not only spark the U.S. economy and bring jobs back into the market, but also to try to correct or try to improve the trade balance that we have with a lot of our major allies here. Now, one thing to kind of note here, Diane, the market might actually be getting a little bit numb to a lot of these tariff comments that are coming from the administration, because if you look at Ford or GM, for that matter, the stocks actually haven't moved a beat. So they might already be pricing a lot of this commentary in. And I'm very, very curious to see, as we hear more coming from the administration around tariff policies and things of that nature, if the market's really going to be really concerned about that, or are we really kind of getting towards that next step, looking forward, looking ahead, knowing that we will have these comments pretty much on a daily basis?
It seems like that is how it's being perceived, especially given that there's dates put out there, but it's unclear if it will be, kind of a hard date or announcement of a sequence of timing. So, for instance, he says 25% or higher, but then also indicated that there may be some kind of timeline to allow for re-domiciling some production for U.S. companies that import a lot. Now, he's also alleged a lot of this has to do with an unfair trade balance. What is your take on the kind of sequence of these things? March 12th seems to be a deadline that's coming up, and then we've got another one right after that, April 2nd. It does seem like the market's just shrugging that off. Does it matter?
I'm not sure if it really matters, and I believe they are shrugging it off. Look, the ability for these tariffs to go into effect, and the expectation that a lot of these companies, especially when you're looking at pharmaceuticals or semiconductors, having the ability to bring those back here in the United States, even this year for massive production, is kind of unrealistic. I mean, a lot of the pharmaceutical products that we receive are actually coming from India as well as from China, and so just it's really hard to ramp up that type of infrastructure in order to meet the needs of Americans here in the United States. So I think that's another reason why he's giving a little bit of wiggle room here, hoping that he might get a concession from some of these key countries. Automobiles are going to be the same. We know that there's going to be an impact when it comes to Canadian tariffs, as well as the Mexico tariffs that are going to be in place here. And you can't really just bring back auto manufacturing on a dime. It takes years in order to try to build up the infrastructure in the right way. And so once again, I think this is more of a talking tactic. Will we see tariffs? I think that is definitely built in, but I also, once again, the market's probably discounting the fact that some of these timelines might be a little bit unrealistic right now, and I'm not sure if the Trump administration really wants to kind of hit the economy in a time when we do have heightened inflation.
That makes sense. And I want to get a thought from you on some earnings that we're chewing on Toll Brothers. But before I get to that, especially in the context of this melt up that we've seen, I know futures action is a little choppy today, but we had the S&P 500 hit a record yesterday, 6129. What's the level you're looking to for, say, resistance or support for today?
Yeah, it was actually a really nice close yesterday, maybe some low volume, and then also a significant market on close order really drove prices higher, around 15 points going into the close, which is good. Obviously, all-time highs is really decent. And then you're seeing market breadth actually expand out, which is another thing that you want have if you are bull in this market. If you're kind of looking at the options flows for this morning, early indication 6150 is going to be your first area of significant resistance. And then to the downside, looking at 6100. Now, there is actually a very key level at 6175 that we want to be mindful of. There's an option structure or trade that has been placed there by JP Morgan and their hedge equity fund. And so I think a lot of options traders are going to be eyeing that level as a potential area of resistance, maybe a potential pullback as well. So looking for around a 50-point range here for today, but it has been fairly choppy. I mean, given, if you take out that last 10 minutes, 15 minutes of trading yesterday, Diane, it was really boring. It was only around a 15-point range for the day.
Yeah, a good point, but you did certainly see that melt up continue. All right, one stock that we're watching this morning that's on the move, Toll Brothers under some pressure. They missed on both the top and bottom line. Give me a couple of your takeaways, KG.
Yeah, so we saw revenue coming in at $1.86 billion here for the quarter. Street was looking for $1.91 billion, and that's around a 4.6% year-over-year decline when it comes to revenue. Adjusted earnings per share came in at $1.75. Street was looking for $2.04. Some key takeaways here when you're looking at operating margins, that came in at 11.8%. That's actually down from the previous quarter of around 15.9%. So they are seeing a little bit of pressure when it comes to their ability to leverage prices, and they actually did make a mention that one of the reasons for the miss for the top line for the quarter is due to a sell of property of an apartment property that just did not take place in the quarter that they did expect, and which is what they guided for. Now, what actually is very interesting, the average selling price for the quarter came in at $925,000 here, but they are guiding Q2 to come in at around $950,000, and also to see a marginal improvement when it comes to the adjusted home sales gross margin, which once again kind of came up a little bit short. So are they seeing the pressure? Yes. Some of that is internal, and then obviously some of that is going to be just the market dynamics when it comes to higher interest rates that might be slowing down sales. So they've had a really great run. You're starting to see a little bit more of a pullback here, and probably a normalization when it comes to their valuations on a forward multiple standpoint, coming a little bit more in line with what we've seen on the 5-year average.
Yeah, right now, Toll Brothers under some pressure in the pre-market, down more than 5%. Kevin Green, next ton for the breakdown on Toll Brothers and also the setup for today.